Hey, primary options traders, Matt Buckley Wiz here. The primary model portfolio just been an absolute crazy week. It's been an awesome week for trading options, but I want to put on a position today that's actually going to be a hedge, and we might be able to get this position at a price a lot better than I'm looking at right now pre-market. The futures are looking up, Dow futures are looking up. Nasdaq, all the futures are looking up, and mainly that is not because Greece decided to grow up and France decided to grow up, but because of housing starts. We had a good April, and they actually revised March's bad numbers up. So taking a little bit of sting out of the recent streak of red, we're seeing the futures up this morning. So here's what we want to do. But however, we're still seeing gold get hammered because people are still buying the dollar. So our strategic mindset remains, as we discussed yesterday in our primary live trade brief, bearish. We are bearish on this market with everything that's going on in Greece, France, California, Illinois. It's the summer of the euro, and then it's the summer of the clown car states here in America. So we are definitely bearish, and we want to take advantage of that. Now we put on a new gold trade yesterday, and it's already taking a little bit of a hit because gold's just getting hammered because the dollar is becoming that flight to safety. But there is a point, and talking to my buddies last night, that wear gold suits, they trade gold so much. Eventually, that's going to stop. Like today, people are going to potentially stop dumping their gold positions to make margin calls because that has long-term value. Literally, the dollar may someday not be worth the paper it's written on. Literally, gold will always have value. From the ancient China to the gold rush in the United States, it's a physical asset. So we're going to stick with that iron condor that we put on for June, but more importantly, we're going to hedge. At Top Gun Options, we're always hedged. We want to live to fight another day. We never push our chips all in on something and get hammered and we're done. Never going to happen. So let's take a look at our Trade Monster platform. Make sure you go to trademonster.com/TGO, and you can get free access to a paper trading account and free access to all their tools that I use and to find some of these potential trades. So let's get right to it. The trade I'm looking at. The trade I'm looking at is on the UUP. And if you haven't heard of the UUP, it's a Power Shares US dollar index, and it's the Bullish ETF. Let's take a look at the chart, and let's open this up to about 6 months. What's been going on with the dollar? Flight to safety when Netanyahu was over here in the United States and sabers were rattling about war with Israel and Iran and some other stuff going on in the world, and then the dollar just kind of faded. And if I could overlay, which I can, but overlay gold on top of this, it has pretty much an inverse correlation. So as we close down our radar and look at the most recent move in the dollar, let's go to 3 months. We can see that, hey, and obviously since the beginning of this month, the past 2 weeks, since we've been bleeding red for the past 10 days, the dollar's been on a tear. Can this tear continue? I don't know. And if I knew that, I'd be Nostradamus. However, I can use it as a hedge. But let's take a look at a full year when we had some absolute stupidity going on in the United States. What happened to the dollar? It rose. But it found a top up here, around 23 bucks. So this is it's potentially found a ceiling, but I don't want to say that because of what's going on in the world. So here's the safest thing to do if you really want to hedge some of those gold positions and the oil positions as well. These are called pairs trades. If you're not familiar with that term, a pairs trade means as one goes down, the other goes up. And that's pretty much how hedge funds operate, right? They might not make the most money, but they make money consistently, which, nice 10, 15, even 20% returns a year are phenomenal for a hedge fund. So let's focus on being hedged. Let's take a look at some options. And I rarely, for all you folks know me, just buy straight out options. This is the exception to the rule. Why? I have no idea what's going to happen this summer. I don't know if Greece is going to leave the Eurozone, what's going to happen in France, what's going to happen in Italy, what's going to happen in Spain. I have no idea still if out of the blue Israel's going to pop up and attack Iran when we least expect it. There's still a lot of volatility out there, so we have some long vol trades on. But here's what I'm looking at. I'm looking at buying deep in the money calls on UUP. And obviously, all these have a delta of 1 because the ETS traded at about $22.52. So what do you think the closest to an 80 delta would be? Well, obviously the 21. The 22 is almost at the money there. So I like the 21s. And let's plan on doing this in the model portfolio. I'm going to buy these, and I'm actually going to buy. I'm going to put an order in a little less here. Call it maybe $1.52 because I think the dollar at the open is you know what? Let's try $1.50. I think the dollar is going to come under a little bit of pressure if we see a little bit of a relief rally today. So, and we're buying 30 of these. Why? Well, let's analyze our trading rules of engagement. We never want to risk more than 5% of our model portfolio on any one given trade. Obviously, the maximum profit is infinite. That's not likely. We'd like to see this move up, obviously, but it's also a hedge. We're paying money for these calls, and they have some value, right, because they're in the money. But it's a hedge. If you want to put some of this on to hedge your paper trading account, that's great. But the reason I'm choosing September with my commit criteria is it's the summer. I have no idea what's going to happen this summer. So buying the dollar right now or being bullish on the dollar is probably a safe call. It's a good hedge. It's money well spent even if the dollar falls a little bit because our gold positions will take care of it. So there's nothing better than being safe and walking away with a little bit of profit as opposed to no profit. So there we are. That's the trade. I'm going to create that order. I'm going to put that into our model portfolio. I'll see if we can get it at $1.50. Again, this is a paper trading account. You got to talk to your registered investment advisor to before you place any trade. But this is what we're going to put in our model portfolio. Spending $4,500 to buy 30 September 12 $21 calls, so they're slightly in the money at $1.50, and we'll see what we can get at the open there. So happy hunting. Make sure you hedge. Stay close to your computers or your cell phones because obviously we're going to be managing some positions pretty closely, and it's going to be a great expiration like we talked about in our live trade brief yesterday. Look at all these positions that are expiring. So I got a busy week ahead of me. So have fun this week. Stay close to your computer, like I said, or your cell phone, and I will talk to you guys. Probably put out a video maybe on Friday just as a how goes it because I like doing these. It's a little easier than typing because I'm a Navy guy and I use two fingers to type. So have a great day, and I'll see you probably on Friday.